Hello, everybody. Welcome back to the Business Bubble. In this episode, it's been quite a long time, we're going to be talking about an inspirational figure in my life. Okay? So, for those of you who this is the first time in the podcast or watching the videos or whatever, this is a podcast where we talk about different kinds of subjects and topics, just because, as a primary purpose, I just want to talk about the things that I like, and I also want to give out the value to other people that might want information in a more packaged way. So this is my way to do that, and at the same time, I have a knack that this is going to help me in the future by getting the things that I really want and helping the people that I really want to help. So yeah, it has to do with that. It has to do with business and finance and investing and marketing and different topics that revolve around business. So this episode, we're going to be talking about someone really special, and he's a huge inspirational figure to me. His name is Ray Dalio. He is the hedge fund manager of Bridgewater Associates. Okay, so it's a hedge fund. A hedge fund is a place where clients come in, usually high-profile clients, and they expect to invest their money for a higher return. And Ray, he founded the company, and he is now valued in $18.7 billion right now. He is in his 70s, I believe, and so he's been through a lot in his life, and he's an inspirational figure because he loves what he does, and he overcame a lot of hurdles in his life. So basically, this episode, we're going to be talking about the three lessons that I draw from his story, from the story of his life. So I guess that in order for you to be able to get those lessons in a contextualized manner, we should be able to go through some of the highlights, some of the key points in his life and his journey that will give you a better understanding of why I chose those three lessons. Okay, so without further ado, let's start with the story. So Ray, he was born in Jackson Heights in the borough of Queens, New York. I don't really have an idea where that is, but whatever. He was an only child. He is an only child, and his mother was a homemaker. His father was a jazz musician. So just from telling you this, he grew up in a middle-class family, meaning that he wasn't rich. His family wasn't rich. He didn't inherit a huge, inheritance or whatever. So it was up to him, and I really like this because I can get myself in a leveling ground with him right now. That characteristic, that trait that he came from a middle-class family, nothing special, he's just an ordinary guy, that made me really believe that I can be achieving something, maybe not the same as him, maybe more, I don't know, but I know that it is possible if you fall in love with your passion and you pursue that in a manner that is productive for others and valuable for society and the market. So, well, whatever, I digress. The thing is that he didn't really like school, particularly in his early years. He much rather spend time with his friends and talking and doing things outside, like earning some money, for example. At his 8 years, when he was 8 years old, he earned money by doing different jobs. For example, delivering newspapers, shoveling snow, and mowing the neighbor's lawn. But when he was 12, he started caddying in the Links Golf Club. So caddying, for those who don't know, is basically being an assistant for the golf players. They have, the clubs, and they bring all the tools and whatever. So he received tips from very prominent Wall Street investors and important men, because this was a very exclusive golf club. So, for example, the vice president at the time was Richard Nixon, and then he became the president, and he attended that club. So, just to give you an idea, and a lot of Wall Street investors. So, when he was 12, he started to listen to different opinions about the stock market and investments and different things like this, because they were all Wall Street investors. And well, him being a kid, he received tips, and then he was like, you know what, maybe I'm going to try out this stock market thing. So he found a company called the Northeastern Airlines, and it was the only company that he had, one, heard of, and number two, he could afford buying some shares of. At that time, it was like $300 worth of shares. And, it was the only thing that he could do, to just get in the market. And he bought that, and he became extremely lucky because the Northeastern Airlines company was an object of a merger, meaning that it was going to merge with another company. So that drove the value of the stock up, and it tripled in value, actually. So he tripled his investment when he was 12 years old. When he was extremely lucky, of course, but he looked at that as, the stock market is amazing. I can make money out of thin air. It's easy to make money. That's what he thought. And I can just get in and learn about this. And he fell in love with the markets from that point on. He was extremely invested. His time and his energy and everything and his focus was very invested in the stock market and companies and valuations. So that was pretty cool, right? I mean, I would have loved to be able to do that. But the thing is that he invested in stocks throughout high school. And by the time he was out of school, he had assembled a portfolio of thousands of dollars, which is, by that time, in the late 60s or something, that was quite interesting. It was impressive, for a high schooler to be doing that. So, however, because he didn't really like school and really didn't like memorizing stuff that he didn't care about, his grades suffered a lot, and he struggled to find a good college to go through. So, I don't know about this college actually, but he went to the C.W. Post College in Brookville, Long Island. And it was different because once he was in college, he was able to study what he actually liked, which was, finance and the markets. So his grades then really went up a lot because he was learning about something that he liked, that he really was passionate about. And this actually as well hits me a lot because I'm not very invested or passionate about the whole computer science or software engineering thing. I think it's a great tool. Everybody tells me that, and I think it's a tool. It's a good tool, and thank God that I was able to, I'm almost done with it. But passion really marks a difference with your life. If you're passionate, you're going to invest the time and the energy and the effort to study more and more, just like I am doing with business and finance and investment. So that is something amazing that resonated with me a lot. Well, I digress. The thing is that he got really good grades in college, and because of that, he was able to go into Harvard Business School. So, yeah, that was pretty cool. But before that, he got a job at the New York Stock Exchange floor as a clerk, meaning, managerial tasks, administrative, like putting papers here and, getting the coffee or whatever. So he did that before getting into Harvard Business School. And in between summers when he was in Harvard Business School, he got a job at Merrill Lynch trading commodities. So he got really interested in commodities, right? By the way, when he kind of got into school, into college. Commodities, for those who don't know, are literally things like goods, for example. I don't know, corn, wheat, steel, whatever, oil. Those are commodities, and you can invest in them in something called futures. I mean, there are other ways you can invest in them, but futures is one of the things that really got his attention because it had a very low margin requirement, meaning that you could invest in commodities having very low amounts of money. So, the caveat wasn't that big. And when he did that, he started to work at Merrill Lynch trading commodities. He then spent a year in Dominick & Dominick, and then after that, he worked at Shears and Hayden Stone, which was a more famous firm back then. However, he he actually got out of that firm because he punched his boss in the face after a time of mockery being under him. So it was pretty bad. He was super stuck up at that job, and he punched his boss in the face. But after that, he left. And when he left, people who were working there with him, they really believed in what he thought and what he said because he really studied the cause-effect relationships of a lot of things that changed prices in commodities. And they followed him. They followed him to create his own firm, let's say. Well, not really firm, but his own company. Now, just parentheses here, because I kind of forgot about this. When he was in Harvard, some of his friends, they thought that it would be a good idea to start creating their own company or their own whatever, so they could sell commodities to investors, independent investors and whatever. So they created this company called Bridgewater Associates. And it was called Bridgewater Associates because they were initially they were selling commodities outside of the United States. So in that sense, they were bridging the waters. But that, didn't really progress that much when he was in Harvard. Now, when he got out of all those jobs and out of his final, job at Shearson, he basically started again Bridgewater Associates with the people that left Shearson with him. And it went really great, actually. He started in his second floor apartment when he was 26. Although he had advised a few corporate clients, on currency exchange and interest rates and interest risks. I'm sorry. His insights were sought by different and more globalized or a wider audience, let's say. For example, McDonald's and one of its major suppliers. They signed on as clients to Bridgewater. So, Bridgewater grew up dramatically. And this is a point that is really cool in the story because I really like McDonald's. I don't know if you guys know, but for me to McDonald's, it's like amazing. It's this, I guess, the closest thing we have to an amazing fast food burger. There's like Burger King and McDonald's, of course. We had Wendy's back then. It was such a pain having Wendy's go, but oh well, whatever. When I went to the States, I tried In-N-Out and Whataburger. They were really great, but In-N-Out got, oh my gosh, In-N-Out got the best of me, and that was so good. It was the best burger ever. So I don't know. I love fast food, and McDonald's is right up there. Not as up as In-N-Out, but it's really up there. So to know that one of my inspirational figures really helped McDonald's out, it's so cool. It gets me going more. It's so exciting for me to know that one of my one of the figures that I look up to helped one of the establishments or restaurants that I really look up to as well. So that's pretty cool. Basically, he advised McDonald's if they could buy chicken so that they could sell their new product called the Chicken McNuggets. So they had a problem because they didn't know how the prices of chicken would fluctuate in the future. And they just wanted to see if it was actually profitable. So Ray studied the chickens and the whole industry as a whole, in a very grand macro scheme of things. And he then realized that chickens were dependent on the feed. So if the feed was profitable, if the feed was cheap, then McDonald's had a profit. And he studied what other types of ways he could help out McDonald's if the price of the feed fluctuated a lot. And so he gave some alternatives, and he basically gave them a plan, a series of indications and things that they could do, and basically gave them the green light with that. And thanks to him, you could argue, we have Chicken McNuggets. I mean, of course, McDonald's would have probably asked someone else or some other firm or advisory, but yeah, he made it possible. He alongside other people, so it's pretty cool. He had a lot of success with this, and he also made a lot of predictions. Back then, I think in the 1980s or 70-somethings, early 80s or 70 or late 70s, Mexico had a debt with the United States. He basically predicted that Mexico was going to default on its debt because they couldn't pay it back. And he made this prediction. It came true. It actually came true. He was actually invited to testify in Congress and help people analyze what was going on. And, he got a lot of press for that. He became famous. And he became very arrogant at the same time because he was basically right all the time. He was really good at what he did. He then made another prediction, a big one, and a very controversial one regarding a depression in the early 1980s. He said that the United States was going to enter a state of depression because of different factors. And he actually asked a lot of the people if they could find some flaw in it, but they really couldn't. And he was 100% sure. He was sure. So what happened is that he was terribly and basically dead wrong. He publicly was humiliated, in national television and whatever. But it was very humbling, he says. He calls this the abyss because he lost a lot of money with this. He basically bet all of it into a depression. And what actually happened was the best non-inflationary run the United States has ever had in its history. And that was great for the United States. So it was actually quite the opposite of a depression. And oh my gosh. He says that the experience was like a series of blows to the head. Just like boom, one after the other. And that was very humbling for him because he was now in a very deplorable state. He had to let one by one of his employees go until the only employee left was him at his Bridgewater Associates, I'm sorry. Now, this was really hard for him because he had 2 young children. So he had to make a decision. Do I go into the entrepreneurial path where it's risky, quote unquote, and, it's kind of tough. It's a jungle out there, and now I'm, wrong, and my self-esteem and whatever. Or should I put on a tie and go to Wall Street and have a job there as a secure, safe measure, an alternative? So he was at this crossroad, and then he was like, you know what? I'm going to go the risky way. It was pretty risky. However, he made some changes, really interesting changes. He says, the abyss taught me that one of the keys to being a successful investor is to only take bets you are highly confident in and to diversify them as well. So that was his motto in investment from that point on. And at the same time, he really was adamant. He was very good at getting people who were really smart, who were independent thinkers, he says, that really didn't agree with his position, but who were also successful and independent and whatever, but who had really different views from the world and the economy. And he got them to work with him. He got them to disagree a lot with what he said, because then he could get into the shoes of that person and really see where that person was coming from and his or her perspective in the matter. So that way he can also stress test his own opinions against those people and see if their opinions or comments have more weight than his have. So by having that group of independent thinkers and just transparency and trying to not be wrong, because he basically developed a fear of being wrong. And all of this he created as a mechanism to not be wrong, because he always believed he was right. So what he found out is that when he thought that, the truth was actually not with him, because the truth could have been, just like he actually failed a lot, he found out that, maybe I don't have the truth with me right now. I have to stress test my opinions and see if they actually make sense. And that's what happened with Bridgewater. And he is now managing, the Bridgewater firm is now managing over $160 billion in assets. So that's pretty much a bunch of money. And it's the largest hedge fund right now in the world. So this is an inspiring story of a guy who was really ordinary, but who had a lot of passion for what he was doing, who sought out information and jobs and things, and he really got invested into this one industry, into this one path. And then he failed quite splendorously. And after that, he kind of redesigned his way of making decisions in a way that he could now be more humble and get other people to participate in his company. So that was super cool. And now he's like one of the most influential people, I think that was said by Forbes or Times Magazine, I don't remember. But yeah, he's one of the most influential people in the world right now, and that's pretty amazing. And okay, coming to the end of this story, I just want to say that the 3 things that I get out of his life are the following. Number 1, he always tells people to write down principles. Write down your principles. What does that mean? Well, throughout his life, through trial and error and a lot of different experiences, he found out that things work as machines. Okay, get me with this. Everything is a machine. Everything has a cycle. Everything has a pattern, he says. Everything repeats itself. Everything. It can be in long spans or short spans, but it all tends to repeat itself. Of course, with different variants, but it's almost always sort of similar or the same. For example, he talks about the short-term debt cycle and the long-term debt cycle, just as we talked about in the previous episode. So he found out how things changed in the markets and how they changed again and again and again, and how it actually resembled patterns. So with that, he said, you know what, since this repeats itself, next time, it's going to happen, of course, because it's going to repeat itself. So next time I'm going to have a principle written down that I can see and I can use to make my decision next time so that I don't make that same mistake. So write down your principles. Principles for life, principles for work, principles for anything. But write them down because those principles are not supposed to change. They're rules that are going to help you and guide you through decisions later on in the future. So that's number 1. I think that's like the most important one. And the second one is stress test your opinions. A lot of people, myself included back then, and still probably, I'm a guy who likes to think a lot about things that I'm very passionate about. Maybe opinions about the government, about politics, about economy, about marketing or whatever. I'm not the king of the world. I don't know anything. I don't know everything there is to know. So a good thing here is to stress test your opinions against people who disagree with you and people who are independent thinkers. So that way, when you have an idea, you can stress test that idea and see if it actually makes sense by putting it out there. Just putting it out there and believing that you might be wrong. Believing that you're not always right. That is the thing. Having that humility, having that transparency in the way that you think and the way that you communicate with others is going to really help you out. That's what he had experienced in his life, and I 100% agree. My intuition is that if I do that, I'll be able to create a company, an organization that is going to let other people cooperate with me and give me some feedback. If, some expert thinks that it's not the right decision and some other think it is and some other think it's not and I think it is, we can all tend to get the best possible answer instead of just being hierarchical and having one tyrant getting that decision. It could get it wrong or get it right, but it's best to have that idea meritocracy, he calls it, and transparency. So number 3, and to kind of conclude this, is if you've got a passion, you can have anything you want, but not everything you want. This is also something that he talks a lot about. And I say this, if you have a passion, because if you have a passion, just like he had, he was an ordinary guy coming from an ordinary family, but he really was in love with the financial markets. He was in love, and he spent his time and his energy and work and everything learning about this because he liked it. He loved it. He wasn't doing it because his parents told him to do it or society told him. He loved it, and he loves it till this day. He loves to help people make decisions in finance and economy. So if you have that passion for the things that you want or the things that you like, and you can invest your time into that, you can get it. You can definitely get it. But you can't get everything you want. That's very different because it's very wide. The world is huge. You can concentrate on something and put all of yourself into that, and most probably you'll get it. But just that one thing, not everything else. So really know your passion. That comes back to self-awareness. If you are aware of the things that make you happy, on the things that you are very passionate about, and the things that just make you feel like it's Christmas every single day you wake up, that is the thing you gotta go for. That is the thing you gotta chase. And that is your ticket to a life where you can get anything you want. Any one thing you want, but not everything you want. Have that in mind. Doesn't mean you're going to be a billionaire if you talk about the Smurfs in a podcast or about business in a podcast. But it means that you will get to a point that you set out in your goals, and through a lot of effort and energy and determination after failures, you'll probably get there or somewhere near that place. Just have that in mind. And, that's what I believe. Maybe a lot of pessimistic attitudes might not believe it. And I 100% agree with that, because they have had tragic lives that might have shaped that way of thinking. But I'm young. I am looking into the bright side of things, and I like to be called Mr. Brightside for that reason. And I think and a lot of people right now in this day and age, it's an amazing era, time to be alive. Holy fudge. We got the internet. We got different mediums of social media and transportation, and everything's so crazy and wild, and there's just so much potential. It's amazing. But those are my 3 main lessons. 1, write down your principles. 2, stress test your opinions. And 3, if you have a passion, you can get anything you want, but not everything you want. This is what I could get out of his life by studying it a little bit and getting that value to you guys from what my perspective was. So, thanks for listening to what I had to think, what I had to say. And thanks for just being around the podcast. This is, I guess, a hobby that I really like, that I really enjoy. And I'm happy that you can be part of this with me. So thanks. Thank you very much. I guess that's it. God bless you, and I'll see you in the next one. Take care. Bye-bye.